G'day guys, and welcome back to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to run you guys through the trade that we set up 2 weeks ago that was still playing out when I was recording the video from last week. And then I'll take a look at Bitcoin as it stands today. I'll see if there's any trades that I like the look of, and if there is, I will set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so the trade that we set up 2 weeks ago was a short on the break of this demand zone. So we had a candle close cross on Bravo. That was what we were looking for. Now we did speak about this last week when price was somewhere around here, I believe, and I had moved the stop loss into profit based on this market structure. So price bounced really hard within the 4-hour candle after that video. So got stopped out for just a very slight profit, which is good. It's better than taking a loss for sure. Would have preferred it came down to the take profit, but you can't win them all. So my key takeaway there is could have taken profit earlier, which is just here. This is something I'm very excited for staggered exits for. I'm a big fan of staggered exits. Mike has been working really hard on those, so they should be coming soon. Something that I'm very, very keen for because it can just help both your trading profitability in terms of, we might have taken some profit there and ended up getting, say, slightly more of a win. Also, psychology. They're really good for psychology. I'll probably do a bit more on that when they do get released. So that is it for the trades that we had set up previously. Now we're going to take a look at Bitcoin as it stands today. Righto, so it is the 5th of September, which means that we have had a new monthly close since the video from last week. So I thought I would come and take a look at that. And it is a bearish close, right? We have had a massive sell-off, which we've been talking about for a little while. Very weak recovery. The last month had a small bullish candle, and now we have essentially, it's almost like a mirror, right? Those are almost identical candles. In terms of the close, it's the open and the close essentially just mimicked or reversed. Sorry. So not a good sign. I shouldn't, like I said last week, good or bad, relative, but not a bullish sign, in my opinion, to see a candle like this, which could be good, depending on how you're positioned in the market and how you want to position yourself in the market. Bearish is not necessarily bad, but that's what I'm seeing on the monthly. That is kind of a bearish sign after quite a weak recovery. If you could even call it a recovery, probably more of a pause than anything, to see essentially all the progress we made in August be undone. Not a great sign for Bitcoin on the monthlies. Righto, so on the weeklies, nothing has really changed because it doesn't change much on the weeklies. You basically just get one candle every video. Still looking at this sort of 19,000 demand. Still looking at this, I think it's about 28,000, 29,000 supply. Still looking at the fibs, and still looking at a really solid rejection from the 23.6, which we spoke about last week. In terms of the candle that we got, it was kind of a bear hammer, if I zoom right in. It did close higher than what it opened, but with a fair wick to the upside. So on the weekly, really not seeing anything that is making a bullish case for Bitcoin. Okay, so down here on the dailies, there's not a whole lot that's changed. We've essentially been stuck in a little range for the last 7 days. I still think when I look at this that we're probably heading down to this, I think it's about $19,300 demand zone. And then above us, there is still a supply zone at 21,300. There's also an EQ at 20,800. Those to me are the key levels at the moment. In terms of where I think we're heading down to this zone. What comes after that? I'm not sure. I'm not even sure we're heading to this zone, right? I'm never sure of anything in the market. But to be honest, usually I would expect to see a bounce. I don't really feel like we're going to bounce from there. I am starting to get a little bit bearish on the market. I shouldn't say starting, right? I've been bearish on the market for probably longer than the market's been bearish, right? I'm a bit of a perm bear at sometimes. But I'm hearing a lot from fundamentals traders and from just a lot of people. I feel like the sentiment of the market is very bearish, and I don't think we've seen capitulation yet. For anyone who doesn't know, if you go and look at a market cycle chart, capitulation is kind of the last step of a bear market. And a great example of capitulation was 2020, which was here, right? Capitulation is essentially when everyone just goes, this thing is dead. And they get out and you see huge, sharp sell-offs really quickly. Capitulation is kind of what I'm thinking we're going to see if we lose this zone. I think there's a good chance if we do, we will capitulate down to, I think 12k is my first level, but 10k is not off the cards for me. Now, one thing that you need to keep in mind, well, not need to, because you don't have to keep everything in mind. You can't keep everything in mind, there's too much. The one thing that it's worth keeping in mind is, in a bear market, bearish news spreads like wildfire and bullish news goes nowhere. And in a bull market, bullish news spreads like wildfire, bearish news goes nowhere. So it's always worth keeping that in mind, that even though I'm starting to hear a lot of bearish things from people that are heavily into fundamentals, one, they could be wrong. They might have no idea what they're talking about. I don't really do fundamentals, so I kind of just have to take them at their word. Two, that news is probably getting to me because it's a bear market. Fundamentally, nothing might have changed from the bull run of 2017. But because we are in a bear market, that bearish news starts to spread further. So reminiscences of a Stock Operator, which is a great book with one of the worst titles to actually say out loud, talks about that. That was where I think I first learnt it from, and he wrote that book. If you don't know, it was an author wrote a book about Jesse Livermore, Jesse Livermore was a trader in, I think, the 1920s, like literally before that there was a Securities and Exchange Commission. So he got away with market manipulation because there was no one keeping track of that stuff. There was no laws against it at the time. That's how early he was in the game. An author wrote a book based on his life. The main character's called Jesse. I think he's a different last name, but heavily based on his life. It's a really good read, right? Because it's 100 years later. 100 years later, and a lot of the same stuff that was going on in the market back then, still going on in the market today. It's because a lot of it is based on psychology, right? I've been talking about that quite a bit in the last month, really. But people don't change that fast. You got millions of years of evolution has wired us to be one way. It hasn't changed much in 100 years. So absolutely worth a read, in my opinion. Really, really good book. But the whole point of that was, just keep in mind, if you are hearing a lot that is bearish on the market, there could absolutely be good reasons to be bearish on the market. I'm bearish on the market. But bullish news will not spread in this market. And at some point, right, if we do capitulate and we get down here, you're probably going to get the most bearish news you've ever gotten. We're going to be seeing, Bitcoin's dead, all sorts of stuff like that. There is going to be no bullish news. But then in 3 or 4 years, I think there's a good chance that we will be looking at that area as the bottom. And at that time, a lot of people won't want to buy because it'll be so low and they'll have watched it come so far down that they'll think it's over. And it absolutely could be over, right? I am not really a big Bitcoin maximalist. I'm not really an anything maximalist. Bitcoin could go to zero. So none of this was really relevant to trades I'm setting up this week, but it was the reminiscences of a Stock Operator stuff was something that was playing on my mind and something that I thought you guys might appreciate learning, hopefully. And after all that, we come down to the 4 hour. So on the 4 hour, we're really just ranging, right? We are really just in a range from about 20,400 to 19,500. There is a supply zone just there, and that's holding us really nicely, right? We're held there. And there is actually a demand zone. I think it comes up to about 19,617, I reckon was where I measured it to, but it's really wide. It's a bit of an ugly zone, so I just won't draw it in there. To me, what's more relevant is this level. That's kind of it on the 4 hour. So one thing that it's worth keeping in mind, so I'm going to say, for me right now, there's no trades. I think price is heading here, or is likely to head here to 19,300. I can't short that. If we break this level, I'm just going to be shorting straight into where I'll be taking profit. I'm going to have a terrible risk reward, not worth doing. I don't want to be taking longs at the moment because I'm bearish on the monthly, the weekly, the daily. The 4 hour is, consolidating, but given that sell-off, consolidation, I'm still pretty bearish on the 4 hour. I don't want to be taking longs. The one trade that I sort of did consider was a short from up here, but then based on this rejection that we've just seen, I kind of don't want to be shorting if we get up there because we might see, price come up, get a higher low, price come up, I'd be getting into that short and market structure would have changed from here. So no trades for me on the 4 hour. What I will talk about is something that I am not qualified to talk about. Wyckoff theory, right? It's something that I find fascinating, but I'm not very well versed in it. Every time that we get into a horizontal range, I think it's worth understanding some Wyckoff. And I'm not going to sit here and teach you any Wyckoff because I don't understand Wyckoff anywhere near well enough to teach it. The one thing that I do know is we have a lot of buys sitting there, right? That is what pushed price up. People buying here, people buying here. What that potentially means is there is a lot of stop losses sitting down here. Now, you'll often hear me talk about stops in terms of market makers targeting those stops to get their orders filled, which they absolutely do. If you have buys here and you have these stops for those buys here, those stops are all sell orders, which means that if price gets down here, a bunch of stop markets sell into the book. Really good for market makers if they want to get a bunch of buy orders on. They can drive price in here and pick up heap of liquidity. But that's not the only thing they do. So they also can just use that to improve the profits on the trades they're in. So if they are in shorts, picture that they've gone short from up here, even higher, even just here. By pushing price to here and triggering all of those stops, if they're not buying those sells hit the books. And what that means is that those sells have to fill on limit orders that are already sitting in the books. So if the books aren't super thick, you don't really hear of thick books, but they call them thin books. I haven't really thought that one through. If the books are really thin and you have a ton of sells trigger, they're going to slam through those books really quickly, right? If there is a ton of orders here, a heap, this is a terrible drawing, but there's a ton of limit buys sitting here, then the market will just sell to their, they might equalize and price will sit here. So if the market makers want to push price further down, they can just trigger all these stops and really get price moving. And then the thing is, right, if that happens, everyone jumps on. So the same thing potentially happened here, right? Let's say that there was stops just below there through here. Those get triggered. Price starts pushing down, and then people go, "Oh, we've lost this level." So then people start entering trades, right? Market selling. People capitulate on a smaller scale than what I was talking about before. People just go, "Oh, geez, I was going to hold my Bitcoin, but we've broken that level. I got to get out," and they just market sell, and all this selling compounds and just pushes price further down, and then more people start to panic, and it really just starts to head down. So no guarantee that's what's going to happen, but something to keep in mind that it could happen if we lose this level. And if we lose that level and come down here and don't bounce and we lose this level, then I think Bitcoin could be heading very low. But we shall see. I'd be surprised to see us at 12K this week. So anyway, that's all that I have to talk about today. So if you're at the MTC Traders Retreat on the weekend, hopefully you had a ball, hopefully you met the team, hopefully you met the ninja. If you weren't, then there is another event coming up in 2 or 3 weeks, a crypto convention on the Gold Coast. So if you want to get to that, we will be there. Not me personally, but the rest of the team will be there. Hopefully you have a great day. Happy trading, and I will talk to you very soon.